the three emotions that destroy traders. You know what you're supposed to do. You've studied the strategy. You understand risk management. You've written down your rules. But in the moment when real money is on the line, you break those rules anyway. You exit winners too early. You hold losers too long. You take trades you know you shouldn't take. And afterwards, you look at the chart and think, why did I do that? I knew better. This happens because trading isn't destroyed by lack of knowledge. It's destroyed by three emotions that feel completely logical in the moment, but are catastrophic over time: fear, greed, and hope. And until you understand how these emotions operate, how they disguise themselves as rational thinking, how they override everything you know, you'll keep making the same mistakes over and over. Today, I'm going to break down exactly how each of these emotions shows up in your trading, what they cost you, and why awareness is the only real protection you have. Because these emotions don't go away, but once you see them clearly, you can start to interrupt them before they destroy your account. Let's start with fear. Fear is the emotion that makes you hesitate when you should act and exit when you should hold. It's the voice in your head that says, what if this trade goes against me? What if I lose? What if I'm wrong? And here's the thing about fear in trading. It feels protective. It feels like wisdom. It feels like you're being careful, being smart, managing your risk. But what it's actually doing is sabotaging your edge. Let me give you a specific example. You have a setup. It meets all your criteria. Your strategy says this is a trade. But you've just taken 2 losses in a row. You're looking at the chart, and you feel it. That tightness in your chest. That voice saying, maybe I should wait. Maybe I should see more confirmation. Maybe this one isn't quite right. So you hesitate. You wait. The trade triggers without you. It runs to your target. You just watched money you should have made disappear because fear convinced you to wait for more certainty. And here's the painful part. There was never going to be more certainty. Trading doesn't offer certainty. Your edge exists in probability, not guarantees. And fear made you abandon your edge because it couldn't tolerate the uncertainty. This is how fear destroys traders. Not through dramatic blow-ups, but through missed opportunities, through hesitation, through the slow accumulation of trades you should have taken but didn't, because fear disguised itself as caution. Now let's look at the other side. You take a trade. It goes in your favor. You're up half your target. Then price pulls back slightly. Nothing unusual, just a normal retracement, but you feel it again. That fear. What if it reverses? What if I give back this profit? What if I turn a winner into a loser? So you close it. You take your small profit, and you watch as price continues to your original target, then beyond. You just cut a winner too early because fear convinced you that protecting a small gain was more important than letting your edge play out. Do you see the pattern? Fear shows up as rational risk management. It whispers things that sound smart. Don't risk it. Lock in the profit. Be conservative. But what it's actually doing is preventing you from capturing the full value of your winning trades. And in trading, you need your winners to be bigger than your losers. When fear cuts your winners short, it destroys your risk-reward ratio. It makes it mathematically impossible to be profitable even with a decent win rate. Fear also shows up as perfectionism. You won't take a trade unless everything is perfect. You need one more confirmation, one more signal, one more piece of evidence. And while you're waiting for perfection, the opportunity passes. Fear disguises itself as discipline, but it's actually paralysis. The cruel irony is that fear is trying to protect you. It's your brain's survival mechanism saying danger, risk, threat. But in trading, that survival mechanism is miscalibrated. Taking a properly sized trade with a defined stop loss isn't a survival threat. It's a business decision, but your nervous system doesn't know the difference between financial risk and physical danger, so it floods you with fear, and that fear overrides your rational plan. If fear is your primary struggle, if you find yourself hesitating on valid setups or cutting winners too early, comment below, because recognizing this pattern is the first step to changing it. Now let's talk about greed. Greed is the emotion that makes you want more. More trades, bigger positions, faster returns. It's the voice that says, "This is working. I should do more of it. I should maximize this opportunity." And just like fear, greed feels rational. It feels like ambition. It feels like you're being proactive, aggressive, taking advantage of favorable conditions. But what it's actually doing is pushing you past your edge into reckless behavior. Here's how it shows up. You have a good morning, 3 wins in a row, you're feeling confident, you're in the zone, and then you see another setup. It's not quite as good as your usual criteria, it's a B grade setup, maybe a C. But you're winning today, you feel like you're reading the market well, so you take it anyway. That's greed, not the setup. The internal justification. The belief that because you're winning, you should keep pressing. That because things are going well, the rules don't apply as strictly. And that trade, the one you took because of greed, is often the one that gives back your morning's profit. Greed also shows up in position sizing. You're confident about a trade. You feel strongly about it, so instead of your normal risk, you double it or triple it. You tell yourself, this one is different. This one is obvious. I should bet bigger on the high conviction plays. But here's the problem. You can't actually know which trades will work. Your confidence doesn't predict outcomes. The market doesn't care how strongly you feel. And when that oversized position goes against you, it doesn't just give you a normal loss. It gives you an outsized loss that can undo weeks of disciplined trading. Greed makes you believe you can predict better than you actually can. It makes you feel like you've figured something out, like you're on a hot streak, like the normal rules of risk management don't apply to you right now. And the market loves this, because the market takes money from people who think they're special. There's another form of greed that's more subtle. The greed that can't tolerate inaction. You're sitting at your screen. The market is moving. You feel like you should be doing something. You feel like opportunity is passing you by. So you start forcing trades. You lower your standards, you take setups that are marginal, because sitting in cash feels like you're missing out. This is greed disguised as productivity. It tells you that being active is the same as being profitable, that if you're not trading, you're not working. But the reality is that some of the most profitable days in trading are the days you do nothing, the days you sit on your hands because your edge isn't present. Greed can't accept this. It needs action. It needs to feel like it's capitalizing on something. And this is how traders overtrade, not because they're undisciplined, but because greed has convinced them that more is better. More trades, more size, more action, when the truth is that less executed with precision is what actually makes money. Greed also prevents you from taking profits at your target. You're up 2-1 on your risk. Your plan says exit, but greed whispers, what if it keeps going? What if this is the big one? What if you're leaving money on the table? So you hold, and you watch as price reverses and your 2-1 winner becomes a 1-1. Or worse, a loser. This is greed destroying your edge. You had a rule. You had a target. You executed your plan perfectly up to that point. But greed made you change the plan mid-trade because it couldn't tolerate the idea of missing additional profit. And that flexibility, that willingness to abandon your rules when you're winning, is just as destructive as abandoning them when you're losing. Do you see how insidious this is? Greed doesn't feel like a problem. It feels like opportunity. It feels like you're maximizing your potential. But what you're actually doing is abandoning the discipline that creates consistent results in favor of the fantasy that you can predict when to push harder. If greed is your struggle, if you find yourself overtrading or taking excessive risk when you're feeling confident, let me know in the comments. This is one of the hardest patterns to break because it's reinforced every time a greedy decision happens to work out. Now let's talk about hope. Hope might be the most destructive emotion in trading, because fear and greed at least push you to action, even if it's the wrong action. But hope paralyzes you. It keeps you frozen in bad positions, waiting for something to change, refusing to accept reality. Hope is the emotion that keeps you in a losing trade. You're down 1R. Your stop should have been hit, but you moved it. Or you didn't set one at all, or you're just watching, telling yourself it will come back. The trade goes against you more. Now you're down 2R. You think it has to bounce soon, it's oversold, it can't keep going. Down 3R. This is definitely the bottom. It'll reverse any minute. and you hold. You hope, you wait, and the loss keeps growing. Not because you don't know you should cut it, but because hope has convinced you that if you just wait a little longer, you won't have to accept the loss. That the market will validate your original decision. That you won't have to be wrong. This is what hope does. It trades a small, manageable loss for the possibility of avoiding the emotional pain of being wrong, and in the process, it turns that small loss into a devastating one. Here's the internal dialogue hope creates. I'll just hold until it gets back to break even. I don't need a profit. I just need to not lose on this one. And this sounds reasonable, but what you're actually doing is giving the market complete control. You're no longer managing risk. You're just hoping. And hope is not a strategy. Hope also shows up when you're in a drawdown. You've had a bad week. You're down on the month. And instead of stepping back, instead of reviewing what's going wrong, instead of taking a break, you keep trading. Because you hope the next trade will fix it. You hope you can trade your way out of the hole. You hope that if you just stay active, things will turn around. But hope without a plan is just gambling. And what usually happens is you dig the hole deeper. Because you're not trading from a place of clarity. You're trading from a place of emotional need. You need to feel better. You need to recover. You need to prove to yourself that you're not failing. And hope tells you that the next trade might be the one that does all of that. The dangerous thing about hope is that it occasionally gets rewarded. Sometimes the losing trade does come back. Sometimes you do avoid the loss by holding. And that single experience creates a pattern. Your brain remembers, last time I held through the pain, it worked out. So the next time you're in a bad trade, hope has ammunition. It can point to that one time and say, see, just wait, it'll come back. But survivorship bias is a killer in trading. You remember the one time holding worked. You conveniently forget the 3 times it turned a small loss into an account-damaging loss. Hope selectively edits your memory to justify inaction. Hope also prevents you from cutting losing positions because it can't tolerate finality. As long as the trade is open, there's still a chance. As long as you haven't closed it, you haven't officially lost. You haven't officially been wrong. The moment you close it, the loss becomes real. The mistake becomes confirmed. And hope will do anything to avoid that moment of acceptance. This is why traders hold losers and cut winners. Fear makes them cut winners because they can't tolerate the uncertainty of letting profit run. Hope makes them hold losers because they can't tolerate the certainty of accepting the loss. It's completely backwards, but it's driven by emotion, not logic. Hope is especially dangerous because it masquerades as patience. You tell yourself you're being patient, waiting for the trade to work, but patience is waiting for your edge to present itself. Hope is waiting for the market to rescue you from a mistake. They're not the same thing. One is disciplined, the other is desperate. And the cost of hope is enormous, not just in the size of the losses it creates, but in the opportunity cost. Every dollar you have tied up in a hopeful losing position is a dollar you can't deploy in a valid setup. Every moment of mental energy you're spending on hoping for a reversal is energy you're not spending on clear-headed analysis. Hope doesn't just cost you money. It costs you clarity. If hope is your primary struggle, if you find yourself unable to cut losses or holding positions well past your stop because you're waiting for them to come back, comment which emotion affects you most, because hope might be the hardest pattern to break. Now here's what makes these emotions so destructive. They don't feel like emotions when you're experiencing them. They feel like thoughts. They feel like logic. They feel like the rational response to what's happening. When fear tells you to cut a winner early, it doesn't feel like fear. It feels like smart risk management. Lock in profit. Don't be greedy. When greed tells you to take another trade, it doesn't feel like greed. It feels like opportunity. The conditions are good. Why wouldn't I take advantage? When hope tells you to hold a loser, it doesn't feel like hope. It feels like conviction. I still believe in this trade. The analysis is still valid. This is why awareness is so critical. Because if you can't recognize these emotions as emotions, if you believe they're rational thoughts, you'll act on them every time. You'll cut winners, hold losers, overtrade, and you'll genuinely believe you're making good decisions. The shift happens when you develop the ability to observe your own thinking. When you can pause and ask, is this my plan talking or is this an emotional reaction? When you can feel the fear and recognize it as fear, not wisdom. When you can feel the greed and recognize it as greed, not opportunity. When you can feel the hope and recognize it as hope, not patience. This observation, this self-awareness, creates a gap, a space between the emotion and the action. And in that gap, you have a choice. You can still feel the fear, but choose to take the trade anyway because it meets your criteria. You can still feel the greed, but choose to stick to your normal position size. You can still feel the hope, but choose to cut the loss according to your plan. This is emotional control. Not the absence of emotion, but the ability to act according to plan despite the emotion. And this is a skill that has to be developed through practice. Let me tell you how these emotions interact because they don't show up in isolation. They create cycles that trap traders. You feel fear, so you hesitate on a valid trade. It works without you. Now you feel regret and greed. You don't want to miss the next one, so you jump into a marginal setup without proper analysis. It goes against you. Now you're in a losing position and hope takes over. You hold it, waiting for it to come back. It doesn't. The loss grows. You finally close it, devastated. Now fear is even stronger. You hesitate even more on the next valid setup. Do you see the cycle? Fear leads to missed opportunities. Greed leads to forced trades. Hope leads to oversized losses. And each emotion feeds the next. This is the trap most traders live in. They're bouncing between these three emotional states, never finding equilibrium, never executing with discipline. The only way out is awareness. You have to see the cycle. You have to recognize which emotion is driving you in each moment, and you have to develop the capacity to pause, breathe, and choose differently. This isn't easy. These are powerful emotions tied to money, ego, and survival instincts. But it's the work. This is what separates consistently profitable traders from everyone else. Not better strategies, not more knowledge, better emotional regulation. If you want more content focused on the psychological side of trading, the part that actually determines your results, subscribe to this channel, because this is what we focus on. Not hype, not shortcuts, just honest examination of what actually makes traders successful. Here's what I want you to do. I want you to track your next 10 trades, not just the outcome, but the emotion you felt before, during, and after each trade. Did you feel fear when you should have entered? Did you feel greed when you sized the position? Did you feel hope when you should have exited? Write it down, because you can't change patterns you can't see. And most traders are completely blind to the emotional patterns driving their behavior. Once you see it, once you recognize that you hesitate because of fear, or overtrade because of greed, or hold losers because of hope, you can start to interrupt it. Not perfectly, not immediately, but gradually. You'll still feel the emotions, but you'll recognize them faster. You'll catch yourself before you act on them. You'll create that space between stimulus and response where discipline lives. This is the real work of trading. Not finding the perfect setup, not optimizing your entry, but developing the psychological capacity to execute a simple plan consistently despite the emotional interference. Fear, greed, and hope aren't your enemies. They're part of being human, but in trading, acting on them is what destroys accounts. Your job isn't to eliminate these emotions. Your job is to recognize them clearly enough that you can choose not to be controlled by them. And that choice, repeated over hundreds of trades, is what builds a sustainable trading career. Not intelligence, not strategy. IHMI. Emotional awareness and self-control. This is Trader's Mental Edge, where trading starts in the mind.